To some earnings reaction. Now, LTIMindtree is one of the top gainers today after Q1 numbers beat estimates. Revenue growth came in at 2.6%. Margins were largely in line. I caught up with Debashis Chatterjee, MD and CEO of LTIMindtree, and began by asking him if the growth rate seen in the current quarter was sustainable. Listen in.
As far as Q1 is concerned, we had a very good start to the FY25 fiscal. And the growth rate that we have, the momentum that we have generated, this is definitely going to get into Q2. The market environment overall has not significantly changed, but so it's a little too early to call out how the full year will play out. But we are very confident that this momentum will certainly get into Q2 as well.
You've also alluded to some green shoots, particularly in BFSI. What is it that we're seeing on the ground?
Well, as you know, BFSI is one industry which is, always dealing with a lot of regulatory and some of them translating into transformation kind of engagements. So as far as green shoots are concerned, we are seeing those early signs where clients are willing to, not only looking at cost takeout, but take those, the savings and deploy into some of the high transformation, high priority programs. And also in BFS, we are also seeing some consolidation where we are well positioned in some of those consolidations.
Okay. But this deployment of the savings into high priority transformational kind of project, is it only happening in BFSI or are you seeing these green shoots even in other verticals?
Well, at this point of time, we have seen it in BFS and we have also seen it in our other large vertical, which is tech vertical. But we will probably have to wait a little longer and see how it plays out in the other verticals. But definitely the growth that we have seen in this two large verticals, BFS and tech, I think we are definitely, that gives us the confidence that the momentum will continue into Q2.
Retail and healthcare for you were two verticals where we've seen a sequential decline. What went wrong?
Well, we don't, when you say retail, it's all, consumer goods and, retail and travel all together. So there is definitely some impact we had in the travel where it has been slow, and also a part of our real estate portfolio did not do well. Healthcare is a small vertical, healthcare life sciences. So a little bit, once it scales, it's still in the scaling up mode. So I'm not too worried about that. But yeah, we are focusing in terms of retail and travel and hoping it will come back.
In our last conversations, you'd spoken about that you're hoping that FY25 margin should be flattish. Now, you still have a wage hike to give out, which you've called out will happen in Q3. So how confident are you that FY25 margins will be flat compared to the prior year?
Well, when you talk about margin, I always keep saying that margin is cannot be a one-quarter phenomena. It has to be a discipline. So that we have gone through a fairly significant integration, and then coming out of the integration, which is now behind us, we again put back the margin program that we used to have earlier. And when you put together the margin program, you put the program with a view that over a period of time, over the next few quarters, you have a consistent improvement in margin. And that's what we are trying to do. So our confidence is even with the wage hikes, we should be able to see the margin holding steady and inching a little better than where we are as we go along quarter after quarter.
How long will this margin program play out for you?
Well, it's a discipline. I mean, it's not something that you do for, we probably, could not have done this when the integration was going on. But as soon as the integration was over, we again put back the same program that we used to have earlier, which helped us in the erstwhile Mindtree, erstwhile LTI. And now I think at LTIMindtree, we have a very robust margin program, which we are very confident about in terms of how the margin can be taken up over.
Your deal wins have been flattish for the last couple of quarters. When do you expect the deal win number to pick up?
So as far as the order book is concerned, it is 1.4 billion for this quarter. And as I have always maintained and mentioned earlier, we don't look at order book on a specific quarter basis, but we look at for the full year. So I would say it's a good start to the year as far as the order book is concerned. And even if you look at the book to bill ratio, that is also steady. One of the things that we are seeing in our deal wins is the deals which are more tenure-based, long-term annuity cost takeout deals. Those continue to replace the project type of opportunities, which only means that the order book should increase as we go along, as well as the book to bill ratio should also improve as we go along.
Last year, your overall headcount declined by, I think, about 2,000, 2,500 employees. This quarter, you've added on some, you've increased the headcount overall. What's the guidance on hiring and attrition?
Well, as far as attrition is concerned, it has been holding steady. It has, and as far as utilization is concerned, it's all-time high. Given that it's very obvious that as we get into Q2 and as we are saying that the momentum will continue, we have to do hiring quite aggressively. The hiring engine that we have is all ready to onboard more laterals, and we have also added significant number of freshers also this quarter. And with all these things, I may not be able to call out numbers, but I can say the engine is absolutely ready to do more onboarding of laterals as we get into the Q2.
Okay, that's the word coming in from LTIMindtree. Some green shoots in the BFSI and tech vertical, and they're confident that the growth momentum seen in Q1 will continue into Q2 also. We'll slip into a very